Hello everybody, doing here again from DRFX Spark Swing Trading. Once again, the pound continuing to rally as has been expected for the last couple of days. Here we can see that the pennant was broken with a break of the support boundary, but the nature of the candles gave us the indication that the breakout might not actually last very long. The reason for this was that these types of candles represent a category of candles that generally have a weak chance, very small chance of actually being successful. Consolidation breakouts generally have three types of candles, and two of those are normally risky to trade, and there's a third one that normally leads to a successful breakout. So that is the one that you would normally try to target and trade whenever we have consolidation breakouts. So since these set of candles fell into the category of one of the two that generally are not expected to lead to a large breakout, it wasn't a surprise that we're now starting to see this sharp breakout, which started initially with this first one that took out the last bear candle, followed by the second one, which has basically taken out most of these candles that we see here. So again, the theory of price action, and in particular the theory behind these three types of candles showing themselves in what is taking place in the market. So unfortunately, persons who may have entered at this area, if they were lucky enough to have exited at this area, then they would have been able to avoid this pullback. But for those who would have been adding to or entering for the first time at this area, at these areas here, at any of these candles, in the expectation that the market was going to continue lower, they would have experienced losses right now. And the question probably would now be asked, why is it that these candles that looked fairly strong and were significantly below the support has led to this sharp pullback that appears to have come out of nowhere? Well, that is one of the mysteries that is explained by these types of candles, by these three types of candles. And once you're aware of them, then you'll be able to spot this potential danger and avoid the temptation of taking a trade here. These sharp pullbacks can appear across the currency market, and they can appear to take place without any explanation. Especially when it comes to consolidation breakouts, persons generally assume that once the market has broken significantly below or above the broken consolidation boundary, then it's smooth sailing all the way. But the reality of the market is that there are pullbacks along the way, and it's very rare, especially for this size of consolidation, it's very rare for the market to continuously move in a particular direction for hundreds and thousands of pips without a pullback. So there are two reasons behind this pullback really. One, the fact that generally speaking, breakouts always tend to have pullbacks along the way. But most importantly, the reason behind this particular pullback is the nature of these candles here. These are the types of candles to avoid, and they generally appear tempting and what's the word? Harmless in terms of a entry signal. But the danger lies in these pullbacks that are normally associated with them from time to time, on most occasions rather. So another example of the three types of candles, and in terms of what could take place right now, the market could actually still continue with this bearish breakout. What could happen here is the market could form a setup before actually reaching this area here without actually reaching the support boundary to threaten the reversal to take us back in. It could move sideways, and then after a few days provide us with a setup and a signal to continue the movement bearish. So that is what is looking at, so that would be a possibility that we could wait for over the next couple of days. On the other hand, this could actually turn into a false breakout setup that eventually leads to a movement back inside of the consolidation and more significantly back above the support boundary of this much larger pennant setup that we see here. So over the last couple of days, what was looking like a bearish scenario that would last for a very long time is now turning back into somewhat of a 60-40 or 70-30 probability in terms of in terms of a bearish versus a bullish scenario. So right now we could actually have a setup that forms at this area here that actually leads to a reversal, and if that takes place, then we're talking about a significant rally that could take us all the way back to the resistance boundary of that larger pennant, 168.91, and assuming that we get to this area here, what is that? That's about a 2000 approximately, just about 2000 pips in terms of a potential move. So a very large potential rally could take place in the pound if we see a strong bullish setup and a bullish signal at this area here. There are generally three types that I look for when we're talking about consolidation breakouts or false consolidation breakouts, and those are among the ones that have there are several of them, but there are 3 to 4 of them that have a stronger chance of actually providing a reliable setup and a reliable signal to take advantage of and trade. So those are the ones that I'm going to be looking for in terms of a bullish scenario at this area here. So in a nutshell, we're going to have to wait to see what takes place here. The bearish scenario is still possible despite this pullback, but given the fact that we're now fairly close to the support boundary once again, it's now bringing the bullish possibility back into the spotlight, so to speak. So it's now more of a possibility than a couple of days ago. So we're gonna have to look to see what are the setups if we're talking about a bullish scenario. What are the setups if we're talking about a bear scenario? Those setups have to be in keeping with what we normally expect for a bearish move or for what we expect for a bullish move. So we're gonna have to wait to see if those setups appear and take advantage of them.